In the previous session, we have seen few transactions from the asset accounting front, right? We have seen the sale of asset as well. Did we see the, one second, let me get into that area. Okay, in the retirement, we did complete asset retirement by scrapping and asset sale without customer. Did we discuss F-92? Did we complete F-92?
I think so. Yes.
Okay, that's fine. So subsequent revenue, subsequent cost that we will see after the retirement, if at all we have anything that we will see later. Next, we will discuss post capitalization. What is this post capitalization about? Okay, one second. Yes. So what exactly the post capitalization is? We have purchased an asset in the last year. Okay, we have purchased an asset in the last year, and we have not procured anything. I mean, we have just created an asset. We have created an asset master, and the purchase is happening in the current year. This is one way of post capitalization in the next year. Basically, what exactly the post capitalization is? It represents basically what it says is the subsequent corrections to the asset. Let's say we have procured an asset in the last year. It means we have created an asset master, we have procured the asset. Let's say we have maintained as $1 lakh, but in the next year when we were going through all our books, we realized that we spent less amount, we put less amount in the asset, we put less amount in the asset, so we are correcting the amount. Okay, so if you want to do those kind of corrections in the subsequent years or in the same year, that is what we call it as post capitalization. Okay, so post capitalization basically tells about the corrections subsequently to the cost of the asset. So basically what I can say in this kind of thing is we have neglected in considering some of the expenses. Let us take an example. I've created a master, plant master, and I've procured the plant master, plant. Okay, it means I got this plant from Australia. We spent $1 lakh. Now, in while getting the plant, we have incurred some expenses. Let's say some 5,000 or $10,000. Typically, what happens is these expenses are to be added to the capital expenditure asset, but we forgot to mention that part, and we have just maintained 1 lakh. After the year, we realize that in such a case, if I want to add them, that is what basically we call it as post capitalization. Okay, post capitalization means we are adding something to the existing asset. Okay, now the important in the case of post capitalization is the expenses whatever are we incurring, the original expenses. Let's say in our example, we are in the year of 2019. Okay, we are in the year of 2019. We have procured one asset in the year of 2018. Now we forgot to enter certain expenses to that. We forgot to add certain expenses to that. In such a case, we will be adding those expenses in the current year. The basic condition in this case is the relevant period and fiscal year are to be closed. That is what the most important thing is. So it should be the original asset transaction should be in the closed fiscal year. Okay, it should be in the closed fiscal year. So basically that is what mainly we call it as capitalization of an asset, but we can post in another way also. Let's see how do we post this transaction. Okay, let's see. Basically, post capitalization, the typical scenario works only when an asset procured in the closed fiscal year and realize the transactions to be added to that, then we will be adding some amount to that. That is what typically the example of the example of the what do you call post capitalization. Okay, so what we will try to post, because we are in the current year, so let's try to post a transaction considering something else. So in order to do that, what I will do, let me let me create an asset. I think we have some assets already, so I'm just going into AS03. Let's see what are all assets we have. We have some assets. Okay, so let me take this asset 3 lakh 1, 3 lakh 1. I'm going into, yeah, I'm going into asset value. There is nothing in this currently. Okay, there is nothing in this. Let me try and maintain some post capitalization to this. Okay, so typically the post capitalization works only for all those assets which have been acquired in the previous year. The same year must have been closed. So post capitalization path for this is easy access, accounting, financial accounting, fixed assets, posting, and post capitalization. Just enter into this. I'm taking the asset and I can take the other things. Now the important thing in this case is, here we have original value date. This should be the closed fiscal year. It has to be there in the closed fiscal year. Okay. And the document date, posting date, you can consider the current dates. But original value date is the one that should be considered in the previous year. That is important. Okay, what I will do, I will just consider current date in both the cases of document date and posting date, but I will consider here 2018. I will say $1,000 quantity one each. Okay, now I just have it simulate. You cannot post to this asset is deactivated. Okay, let me just go into AS03. We did not notice that part. Here it is saying as deactivation. So this is the reason why it is not allowing us to do, but that's fine. So let me create an asset.
You can go to ASO2 and remove that date. You can
Of
do
course,
that.
we can do that as well, but I'm just
Yeah, we
creating.
can, okay, yes, we can remove
Yeah,
that
we
date.
can do that. Yeah, we can do that. I'm creating a new one. Okay, I have this and saving. Okay, so I'm going to change. You can see this entire information. Okay, right. Now, what I will do, I'll consider this for post capitalization. I'll consider this asset for post capitalization, ABNAN. Okay, selecting the same thing, selecting the dates, and I'll put the last year date. Okay, so what I will do, I'll say 1st August of 2018. I'll say $1,000 each and post capitalization. Post capitalization. Okay, let me just see. Post capitalization is not possible, no initial acquisition data. Okay, that is what I was mentioning. Let me try to post a transaction to it, but it has to be a closed fiscal year. I'm just trying to replicate this scenario, but normally what happens is in our regular business scenario, we may have some assets created in the previous year. The year might have been closed. So in such a case, we may use this scenario, but I'm trying to replicate this. Let me say it as, okay, 1,000, 12,000, I will say. Contra account I'm taking. Let me try to post a transaction in the previous year, but previous year is closed, but still let me see if I have any option to do that. I'll create a new asset. X300, cost center going to be 1,000. Let me do this. Let me try. Okay, so to 15,000, I'll put 15,001 post capital. Sorry, this is what basically a capitalization. And let me take staking in the earlier period. So yeah, you cannot post fiscal year already closed. So it's difficult for us to do. Let me just see. Let me try to make it happen, but let me see. Okay, so I'll put current date here, but this is going to be 2018. Okay, 2,500, one each. I tried to do this in the earlier, but I don't remember how I did. Okay, let me just try to see this. Original value not allowed before year of acquisition, capitalization. Okay, I will try to replicate because I tried in some other way, but I am not getting exactly how I did earlier. But we will have an option to do that. We can find out a way for this. Okay, I'll try to find.
Current year and next year?
We can do that way also. Yeah, I think 2020 is also open, right? So let us see that. Okay, let us see that. Okay, let me take as I have not tried this part, but let me try because I found a way for it. Let me see that. We have a way to show this transaction. I forgot the approach, but it is just an alternative approach. But the best approach is to consider this thing. Oh, close. The date entered is not in a closed fiscal year. Yeah, because 2019 is not closed, right? Original value date is very important for us. Okay, let me try to make it as 18. No, I will find out. I'll figure it out. I'll find out a way for it and I can show you tomorrow. Okay, so the next we can see, let's see the next one. I forgot the way to show this scenario, but we have an option to do it. Let me show you that tomorrow. Okay, write up. What is this write up? In order to increase the asset value, we have write up. Let's say after 2 or 3 years, typical the scenario. I'm just telling you the typical scenario. Okay, so we have procured an asset with $1 lakh and we have provided some depreciation, some rate of depreciation for 4 years. Let us assume. It means we have provided 40,000 out of 1 lakh. Now the net book value of the asset is showing as a 60,000. After 4 years, firm valued the asset. The valuation happened for this particular asset. Now, after the valuation, it came to know that the value of the asset is not 60,000, it is 70,000. It means we will have to add 10,000 to the asset. That is what we call it as write up. Okay, and the other way, let's say the net book value is 60,000. Upon the revaluation, firm decided the asset value is 55,000, not 60,000. So that 5,000 should be reduced. That is what we call it as unplanned depreciation. Okay, write up, it means in order to increase this and in order to decrease this, we will have to use. Okay, so let me just get into ABCU. I can add, I mean, I've just given an example, but you can add the asset in the current year as well. Whenever we'll do the revaluation, or if at all we have missed some expenses, if we want to add them, we can add. In any case, we can add such expenses over here. Okay, write up. The path for this is easy access, accounting, financial accounting, fixed assets, postings, manual value correction, and ABZU write up. Just enter into that. Here transaction type is 700. By default, we got this 700. If you see over here, 700 is write up ordinary and special depreciation. Write up ordinary depreciation. Okay, so special depreciation for both of them, it is used. Okay, just select the same. Now here enter the dates. So I will put 1st August of 2019. I will say write up. Write up specification, ordinary depreciation write up. So I will say One second. I think this is a new asset we have created. So I will show you with the existing asset, you will understand clearly. Okay, this is the one. Posted depreciation for 2019. There is nothing in this, right? Okay, let me figure out the other one. 2019, yes, we have something over here. Okay, now what I will do, I'll take this asset. So I'm selecting that particular asset number, entering here, taking the dates, okay, and I will say 100. Okay, now I'm just simulating it here. You cannot post write-ups. What is the problem? None of the areas to be posted in accordance with the transaction type entered manages one of the depreciation type entered cumulative values. So the transaction type should be 700 only. Check the transaction type. It should be 700 only. We normally consider this only, but anyways, let me just try. But it has to work with 700. Let me try this. Oh my God. So there is some problem with the transaction type itself.
Depreciation.
Normally, sorry,
Does it need depreciation area?
we have already have depreciation area, right? For this asset, we have already have depreciation areas. Now, are you saying about these things? Are you talking about these? Hello, madam. Are you talking about this?
Yes, yes.
No, no, no. I mean, if you want, we can post a specific to a particular depreciation area. The moment we post here, it updates to everyone, every depreciation area.
Okay.
That is not the case. 700, it has to work with 700. None of the areas to be posted in accordance with the transaction type entered manages one of the depreciation types entered are cumulative values. Check the, the error message is also not clear. So probably there is some problem. This unplanned, it is coming to the unplanned, which is not the right one. No, it's not allowing me to do that. So probably there is some problem with the transaction type. It normally allows us to do that. It is just an addition to the asset value. We will be just adding the additional value to the asset. That's what we call it as write up. But I don't know why. What's the problem with it? could be the these are the normal transactions it has to work. Okay. Let me also let us try this unplanned depreciation. Let's see whether it works. Okay. Path for this is same unplanned depreciation. So it's before we get into this unplanned depreciation, I'll show you one. Yeah, here, if you see here for 3 lakhs asset in AW01N, we have one field called unplanned depreciation. Okay, similar to that of write-up, you can see unplanned depreciation. The moment we post this transaction, it has to get updated over here. That is the expectation. Okay, that is the expectation. Now let's see, let us try and post this transaction. ABAAL is a transaction code to enter. Okay, 640, and I think there is one more 650. So 640 unplanned depreciation on prior year acquisitions, unplanned depreciation of the current year acquisitions. If you have an asset procured in the earlier years, then you will have to select 640 as a transaction type. If the asset acquired in the current year, and if you want to post some unplanned depreciation, select 650. So since this asset acquired in the current year, select 650. Okay, just enter. Now here we will be entering the asset is already there, and we will be entering the date. So I will say 1st November 2019. And amount I will say as $500. Okay, unplanned depreciation. I'm just saying as the unplanned depreciation. Okay, now I will simulate it. I think we will not have a depreciation here, but when we go into AW01 we can find the amount. I really don't remember whether we are going to get a journal entry. Let's see. There is no FI document for accounting principle gap. So I think this is what the right approach. Yes, I think there won't be any journal entry, but once you post it over here, okay, you can see a document, something of that. Okay, and let's go and check the asset explorer. So still we are not finding it. We have posted some amount. Let's see. Yeah, unplanned depreciation you can see. So for unplanned depreciation, you will not see a journal entry. It will update in the report. So you can see this 500 in the report. Now this will be adjusted. This 500, whatever the unplanned depreciation we have, that will be adjusted in the next available posting period, depreciation posting period. So I'm just going back to 2019. You see here 225 is the one that we have already ran. Now the period 11th period is available. You can see here 500. So whatever the unplanned depreciation that we have posted, that will be considered as a depreciation in the next open depreciation period. So during this time, you can see a financial document. Just we are providing the amount, we are just providing the depreciation amount, and once we run the depreciation for 11th period, you can see 545 total 545 transaction that will get updated in finance. Until that point in time, the unplanned depreciation will not be adjusted in financial financial area. Any questions here in the unplanned depreciation? So the basic point is unplanned depreciation is just the while posting that unplanned depreciation, it just acts like a provision entry, and it goes and sits in the reports, right? You can see in the Asset Explorer report, and you can see the amount of unplanned depreciation, and the same unplanned depreciation will be considered as a depreciation in the next open depreciation period. So during that time, we will have a financial impact. Any questions here?
Can you go back to that plan?
Sorry?
Can you please go back to the planned value tab?
Okay.
Okay. So you posted 500, right?
500, yes.
Okay. Let me see it in the posted value tab.
You can see 500 over here
Okay.
under unplanned depreciation.
So it will show the depreciation. It will show the depreciation where how it's been depreciated, right?
Sorry,
The one
sorry.
you write check under the ordinary depreciation. ord.dep on the left. Come to the left. Down.
Here?
No. It's down. I'm talking about the yeah. You see that one that says ordinary depreciation?
Are you saying this thing?
Yes. Is that the
Okay.
area charge?
No, I did not get your question.
What I'm saying is that the depreciation?
No, this is what the original depreciation. We got this from the original, but this unplanned depreciation will not be added to this.
Oh,
But
okay.
after running this 11th period depreciation, both 45 and 500 will get updated in finance.
Okay. Okay.
So both will get impacted only once we run this thing. Okay.
Yes. Thank you.
Yeah. So this is typically we call it as unplanned depreciation. Similarly, I mean, this is to reduce the amount, whereas write-up is used to increase the amount of the asset. Okay. So we will see, the other transactions. So any other questions to before we proceed further? Okay, right. So the next we have is miscellaneous, ABSO. I think ABSOL or something is the new transaction code. Let's see that later. Okay, so what is this miscellaneous? If at all you don't have any specific information, if you want to add or subtract to the asset, you always use this transaction. Okay, so these are all the different types of transaction, but ultimately the goal is the same. Just we are adding the value to the asset. That's it. Okay, so miscellaneous transaction. The path for this is easy access, accounting, financial accounting, fixed assets, posting, and miscellaneous, ABSO. Just enter into that, take some asset number, and the transaction type, I think 110 or 120. In-house acquisition. Yeah, goods receipt 120 we can consider. So this is for the additions, right? This is for additions to the asset. So 120 can be considered. Just enter into here, put some date. I will say 10 2019, 10 2019. I will say some 200 miscellaneous transaction, and here you can see the offsetting entry, offsetting account. Okay, just simulate it here. You can see the journal entry. Okay, I'm posting the transaction. That's it. Transaction has been updated. Transaction has been updated over here. If you go back to see the Asset Explorer, we will find that value here in the acquisition. Earlier it was 27,000. We have since we have a miscellaneous, the 200 is added over here. If you add another 300, this becomes 27,500. So accordingly, the ordinary depreciation also gets changed. Okay, so now if you want to see, you can see from here 200. You can see it from here. 200 has been added with the transaction type as 120, so that you know the acquisition value became as 27,200. Okay, so that's about the other transaction. Now in the what do you call in the reports, in the assets side, from the assets front, assets module front, we have some reports on AR series, AR01, 02, like that. I don't know how many transactions are available in the easy access path, but most of them are not available. AR01 we have, AR30, but AR02, let's see, AR02. So we don't find here AR02. Yes, we have AR02 in this, AR01, AR03, we have AR05. These are a little important. I think we don't have AR05. 06 is there. Okay, but anyways, I will show you AR05. We have a report on AR05, but we are not finding any path for that. Okay, so I will give you the list of transaction codes. I think I did mention somewhere in my Gmail account. I will figure that out and I can send you the list of AR series reports. Just go through them, you will understand some information there. Those are very, very important. Okay, AR01, asset balances report. You can see for company code and asset classes, you can enter the report date. Okay, sort variant, of course, we have seen. Just execute, you can see all the asset balances, whatever the assets we have, acquisition value, cumulative value, and book value. These reports are very, very important reports. Instead of using S underscore ALR underscore reports, we always better to use AR series reports. Now in AR02, You can see some asset history sheets. Okay, just execute. If you don't enter asset class, all assets will come up. So this is what the information. So this is an asset number, serial number, capitalization date, asset description. Okay, now here you see acquisition. Okay, then retirement, transfer, post capitalization, investment support, APC, current APC. Next, depreciation for the year 818. Depreciation on the retirement, depreciation on the transfer, post capitalization, write ups, accumulated depreciation. Now, current book value is this much. This minus this will be this. Okay, so the other asset we have. So of course we have, we have sold this off, so there is nothing. So like that, you can see for every asset here. Okay, next is AR03. Okay, just execute. You can see some other information, right? Acquisition value, accumulated depreciation, planned depreciation. You can see the complete information. I mean, each report gives you some information. Then next is, I mean, we have AR06 or something, but AR08 is one of the important reports. This is AR06. AR06 gives us the retirement information. It means asset sales information. Okay, so we have some information about this. We can find how much we have realized and what was the original value and how much we have provided as a depreciation. So we can see the complete information about the same. So I will provide you some information on that. I think AR25 is one of the AR08, AR25 depreciation comparison. You can enter multiple depreciation areas. You can see the comparison. So you have only depreciation area 01. But if I enter something like 02 or 40, if I enter 0, 1 and 40, you can see the depreciation comparisons accordingly. See 01, 40, 01, 40. How much is here? How much is there? You can see. Because in our case, all the depreciation areas, we are considering the same depreciation key. That is the reason why we can see the same amounts. And there is another report, AR25. So AR25 is posted depreciation. This is for posted depreciation. Okay, you can see the amount of acquisition value and depreciation posted. Okay, so I think we have AR10 or 12, AR12, unposted, directory of unposted assets. Some information, it gives you some information. Directory of unposted assets.
This report just tells you created the records, but there is no posting.
Yes, unposted assets. Because this one we have, it is deactivated. This one is deactivated asset. Unposted assets. So probably we'll have some assets without any value. All those assets will come up over here. Each report will have some information. Each report will give us some some information you see here. So for all these assets, the value is 0. Okay. Each report will give us some information. So what I will do, I will send across in our WhatsApp about the report T codes. I want you to go through all of them and take a look. We really don't remember what are the reports. I mean, what kind of those reports, we don't remember them, but it is better to have a handy information during the implementation. We will go and we will pick up the information, we can send across, we can publish that information to the client. Okay, so it's very difficult for us to remember what T code and what for the particular transaction code is, but if at all you have that list with you, that becomes very handy during the implementation. So I'll send across that information by tomorrow. Okay, so that's all I think today, because I have to go through on the write up and post capitalization thing. So tomorrow we will continue. We have intercompany transaction there. We have asset under construction, AUC, capital work in progress. Scenarios are pending still here in this. Any questions?
Nanda,
Mhm.
what about asset deactivations? You said that our system does automatically once you
Yes,
sell
yes,
the.
yes.
Okay.
We don't have to do anything. It
Okay.
happens automatically.
And there was another asset explorer. I saw spatial depreciation. So what is that?
Asset Explorer,
Yeah.
AW01N. Yes, special depreciation is
Yes.
there that I will have to figure out, as I mentioned earlier, right?
Okay.
We, we have never used this special depreciation thing at all in our, the implementation, in any of the implementations. But I will figure this out. We will discuss
And
that part.
yeah, I'm still not quite understood, the concept of contra account. There is a like you
So it is
purchase
just
the.
simple. It is just simple, right? When you are procuring any asset, if at all you want to have any transaction in accountancy, we need to have one debit, one credit. It
Yeah,
means at least we should have two GL accounts,
correct.
right? If you are purchasing it from a customer, sorry, from a vendor, or if you are selling it to a customer, so you will have one side you will have asset, the other side you will have a customer or vendor.
Right.
But what if we don't have any customer or vendor? So you need to use one offsetting account that's called contra account. That's it.
But
So without any vendor or customer, we are selling it.
okay, selling it or purchasing it.
Purchasing, yes.
Okay. Now, sometime it happens, we purchase the asset, by on cash basis. For example, we immediately issue the check.
Mm-hmm.
So in that case,
So the
contra
cash,
account
you are
does not
saying
come.
no cash account. Normally, we will not be using the cash transaction for all these. Okay. So what we will have to do is we will have to use a bank account for that. So in
Yes,
such a
correct.
case, again, contra account comes into picture. Okay, I will tell you what exactly the entry going to come.
Oh,
So what we will do in such a case, we will be using contra account as usually. We are not going to use bank account. System expects only the contra entry, contra account.
oh,
Okay, so in such a case, let's say I'm procuring an asset gets debited and contra account gets credited.
right.
This is the one that we are entering in the transaction. This is in the case of acquisition. Now, at the time of acquisition asset, I'm paying the amount in check. I'm
Right.
not getting any, I'm not procuring it from a vendor. So I'm paying a check. So in such a case, assets gets debited, contract gets credited, and after that we will have to post a manual entry saying debit the contra account and credit the bank account.
Okay, all right,
We
clear.
will have to enter this. So because of that, this contra account will be normal liability account, balance sheet liability account. It cannot be a reconciliation account
All right,
without open item managed. It is normal liability GL account.
okay,
So normally we don't make in cash, we don't use cash transactions.
okay.
I mean, again, that the income tax issues come up. So normally we don't pay in cash. We will issue a check.
Right, that is what I meant. Suppose you just immediately pay the check. Suppose we go to the furniture stores and
Mm-hmm.
you purchase the furniture for the office, and
Mm-hmm.
you at the same time you write there and there you issue the check.
Yes,
So there is no vendor involvement,
correct.
and can't we post an entry as such asset debit and bank account credit straight away?
No, we cannot. We cannot do that.
Okay.
We cannot do that.
Oh,
It
I see.
has to go through the contra. For that reason only, we have a concept called contra.
Okay. So there is some procedure we have to follow in asset accounting.
Exactly.
Okay.
Exactly.
Not only asset accounting, it's a segregation of duties. So accounts payable people, they don't know what's asset accounting. So they have given one account contra account. That's what they use. And then the other people take over from there and capitalize what they need to. That's how it is.
Right. Okay. Fine. So thanks everyone. Thank you.
Thank you.
Thanks a lot. Thank you. Bye.